Hi everyone. Welcome to Info Dimension channel. Today's presentation is on the anti-money laundering and terrorist financing. This presentation is developed by Mr. Nasar Abdullah Al-Salhi. He is a Chief Compliance and Risk Officer in the Dhofar Insurance Company, operating in the Sultanate of Oman, under the license granted by the Capital Market Authority. Mr. Nasar also served all his professional career with Capital Market Authority and retired from CMA as Director Insurance, Risk Surveillance and Evaluation Department, before joining Dhofar Insurance Company. This presentation shall cover the topics including, why there is an interest on money laundering and terrorism financing, what actually anti-money laundering is, what type of money is involved in money laundering, what is terrorism financing, its economic and social effect, its common stages, use of insurance companies and insurance products, some UN resolutions, restrictions on cash transactions, suspicious transactions, due diligence types and procedures, reporting of various transactions, sanctions, and legal actions on violation or non-compliances. Let's move to the presentation. The money laundering is a universal crime. It is estimated that globally, the amount of money laundering is approximately 2 to 5% of total global GDP. Its estimate ranges from $800 billion to $2 trillion. We can see the magnitude and size of this crime. That's why criminals are attracted towards money laundering, because it looks lucrative for them. What is money laundering? Number 1, actually, it is a substituting or transferring of funds, with the intention of disguising or concealing the nature and source of such illicit proceeds, or assisting the person who committed the predicate offense to escape punishment. Number 2, disguise or conceal the true nature, source, location, disposal, movement, ownership or rights of the funds. Number 3, the existence of a money laundering offense is limited to the existence of funds resulting from crimes committed. What is a predicate offense? Any act constituting an offense under the laws of Oman, and acts committed outside Oman, if they are considered an offense, in accordance with the laws of the country in which crime was committed, and Omani laws. These may include bribery, embezzlement, organized crime, drug trafficking, and illicit arms sales. What is terrorist financing? Terrorist financing is where any person, who willingly and by any means whatsoever, provides or collects funds, directly or indirectly, knowing that they will be used, in whole or in part, to commit a terrorist act, or by a terrorist person or organization. There are many economic and social effects of money laundering and terrorist financing crimes, that includes: Number 1, prevalence of organized crime and corruption. Number 2, making wrong decisions regarding economic policy. Number 3, economic distortion and instability. And Number 4, impact on the reputation of the state. There are many stages of the crime of money laundering, however some common stages are: Number 1, placement. In the placement, the money launderers deposit illegal proceeds in official channels of the financial and banking system in several ways. Number 2, layering. In the layering, the money launderers carry out a range of transactions and movements of funds, with the aim of disguising their illegal origin, making it difficult to follow it. Number 3, integration. In the integration, all money laundering efforts culminate in the final integration stage. The money is sent to the criminal's registered bank accounts, where it can now be spent as legitimate or clean money. The involvement of insurance companies in the money laundering. The general insurance sector is one of the sectors that is least exposed to money laundering risks, because many insurance products of general and health businesses do not include the advantage of saving, transferring money from one person to another, continuous cash flows, or any means of hiding money. Life insurance is more exploited by money launderers, where large amounts can be invested in various life insurance products that are highly flexible and provide excellent returns. Each life insurance product has characteristics that distinguish it from other insurance products that can be exploited by the money launderer. As we know that most insurance companies do business through intermediaries, such as insurance brokers or agents. Therefore, money launderers can also use these intermediaries as well, as a part of placement or layering stages. In terms of combating terrorism and obstructing the proliferation of weapons of mass destruction and their financing. The company must comply with the provisions stipulated in the list of procedures for implementing Security Council resolutions issued by the National Committee for Combating Terrorism under Resolution Number 1 of 2022. It requires to freeze funds, and issuance of insurance policies must be stopped, directly or indirectly, without delay, within a period not exceeding 24 hours, from the date of inclusion of any person in the blacklist, issued by the Security Council, and the Financial Sanctions Committee. The United Nations website should be accessed, to get the list of those sanctions. It also requires, to have periodic and continuous follow-up, of the amendments and updates, that are made to the list, and examining the company's internal data lists in comparison with the list. To avoid cash transaction, it is important to activate electronic payment. Circular number 18 of 2020 of the CMA requires not to receive any cash for life insurance policies except through electronic payment, and not to receive any cash from legal customers for general insurance policies except through electronic payment. Also, not to receive any cash amounts exceeding 1,000 Omani riyals per document from any customer except through electronic payment. There are some indicators of suspicion. Number 1, where a person shows reluctance to provide basic information when submitting a document request. Number 2, there is a delay or reluctance to give information to the Know Your Customer KYC verification process. Number 3, if premiums are paid unexpectedly. Number 4, if someone is using a third-party check in order to purchase a document. Number 5, if someone is greatly interested in cancellation, more than policy coverage. There are generally 3 types of due diligence. Number 1, simplified due diligence. Number 2, customer due diligence. Number 3, enhanced due diligence. Let's explore more about these 3 types of due diligence. First, simplified due diligence, where the procedures can be relaxed if the client has a low risk due to many factors such as if having a long business relationship with the customer, with a record showing regular installment payments, in line with the client's profile and source of funds. If the customer is identified directly. If financial institution and non-financial businesses and professions, that are effectively supervised and controlled, to ensure compliance with the requirements of the law. If companies listed on stock exchanges of countries, that have disclosure requirements that comply with international standards. Or, if they are public bodies and institutions. Second, customer due diligence. The organization shall take customer due diligence measures differently in different cases, such as, for a new customer, before establishing labor relations, or, where in case of suspicion of money laundering, or terrorist financing is observed, or, where the documents to identify the customer identity is already obtained earlier. Second, enhanced due diligence. It generally includes, first to identify the persons, with official or political positions called, PEP, that is, politically exposed person. Secondly, to obtain additional information about the customer, and the beneficial owner. Thirdly, to regularly update the customer and beneficial owner's information. Fourthly, to get information on the reasons for the transaction. Under the relevant laws and regulations, there are some obligations to report and provide information, such as Number 1, to report any suspicious transactions to the center immediately, and not later than 24 hours from the time of suspicion, that any transaction or attempted transaction is related to the crime of money laundering or terrorist financing. Number 2, persons obliged to report are prohibited from disclosing directly or indirectly, by any means whatsoever, to the customer, beneficial owner, or any other party, that they have been or are about to be reported, or that there is an investigation into them. Under the relevant laws and regulations, there are some defined methods for reporting suspicious transactions, such as Number 1, when any transaction is suspected, please do not hesitate to send the full data to the compliance department, where the department will communicate with the concerned regulatory authorities. Number 2, the employees must maintain confidentiality, and should not disclose any reported transaction especially to the customer. Applicable legal regime provides the sanctions against financial institutions and their representatives. In case of violations of the applicable legal requirements, the Article 96 of the law states that the chairman and members of the boards of directors of financial institutions, non-financial businesses and professions, associations and non-profit organizations, their owners, authorized representatives, employees shall be punished if the center is not immediately informed upon suspicion, or disclosure directly or indirectly to the customer, the beneficial owner or any other party, that he has been informed, or is about to be reported, shall be penalized. In this case, if the violation is committed by a natural person, then that person can be penalized by imprisonment for a period of not less than 6 months, and not more than 3 years, and a fine of not less than 10,000 Omani riyals, and not more than 20,000 Omani riyals, may be imposed. If the violation is committed by a legal person, then a fine of not less than 50,000 Omani riyals, and not more than 100,000 Omani riyals, may be imposed. In case of violations of the applicable legal requirements, the Article 95 of the law states that the chairman and members of the boards of directors of financial institutions, non-financial businesses and professions, associations and non-profit organizations, their owners, authorized representatives, employees shall be punished if deliberate or gross negligence in taking actions and due diligence measures. The punishment may be an imprisonment for a period of not less than 6 months, and not more than 2 years, and a fine of not less than 10,000 Omani riyals, and not more than 50,000 Omani riyals, or one of these two penalties. Before closing, it is to mention that anti-money laundering efforts must transcend political, cultural, and geographical boundaries. It is our collective responsibility to safeguard the integrity of our financial systems, protect our economies, and foster a world where criminal activities find no safe haven. Let us stand together, committed to promoting transparency, upholding the rule of law, and combating money laundering in all its forms. Through our unwavering dedication, we can build a future where financial systems serve as engines of growth and prosperity, free from the taint of illicit funds. Thanks all of you for watching this presentation. I hope that you all would have learned brief presentation on the anti-money laundering and combating terrorism financing, together with its relevance with insurance sector and laws and regulations applicable in the Sultanate of Oman. This video is compiled by the Info Dimensions. Please don't forget to like and subscribe the Info Dimensions channel for more useful upcoming videos.